Welcome to the inaugural launch of our non-QM webinar mixer at A&D Mortgage. Thank you so much for joining. We'll be sharing 5 webinars over the next 5 weeks where we'll be discussing everything from the benefit of adding non-QM loans to your portfolio, current market trends, the types of buyers that benefit from non-QM, and what the future of the market looks like. Be sure to submit your questions throughout our webinars. Of course, share, like, as we'd love to get the word out of how A&D Mortgage is disrupting the industry in the non-QM space. We'd love to hear from all of you and answer as many of your questions as we can. We wouldn't exist without our broker partners, and we want to provide you with as much value as possible. I'm David King, Chief Marketing Officer at A&D Mortgage. I've been in the mortgage and real estate space for 10 years now. I'm probably not the most qualified person to answer your non-QM questions. That's why I'm bringing some of the brightest minds of non-QM to add to the conversation. I'm excited and honored that you take the time to learn more about our products in our company. So let me introduce our guest speaker, Mark Glazer. Mark has been in the mortgage, banking, real estate industry, and sales management for 35 years. He's a native to Florida. He has exceptional business development skills, cross-training skills, and is just a good guy overall. He loves to play golf. His grandfather taught him the real estate business at 10 years old by collecting rent in his apartment building. He got his real estate license at 19. He's been a licensed mortgage broker, appraiser, and Florida Supreme Court certified mediator. He opened his own mortgage company in 1988 and sold it in 2002 and became a mortgage account executive in 2004. He's fully versed in non-QM, Fannie, Freddie, and commercial lending, and he walks 3 to 5 miles every day in the morning, and he joins us now. Mark, welcome to the broadcast, sir.
Good afternoon.
Is there anything that you want to add to that quick little intro? I find it interesting. Your grandfather brought you into the industry at it was 19 in that way.
Yeah, well, he brought me in early on, and then I had neighbors who were in the real estate business. They said, why not make a living while you're attending University of Miami?
Right.
So I got my real estate license, and that way on the weekend I could show property and make extra money.
Well, welcome to the call. We're excited to have you.
Excited to be here.
Let's talk about the next 5 weeks. We're going to add more guests in the future, and over the next 5 weeks, like I said, we're going to have 5 webinars. Today, it's all about non-QM, and Mark, that's why you're on the call. Next week on June 2nd, I believe it's the day after Memorial Day. Hopefully you all can make it. We're talking about bank statements. June 8th, jumbo loans and how they make a big impact. June 15th, all about Dscr, no income verification, no problem. And June 22nd, we're going to go over all of the questions that we get from all 5 weeks and hit some of the highlights. Today, we are going to be monitoring all the comments on Facebook, on LinkedIn, on YouTube. I've got a team behind the scenes working their magic, and they're going to filter those questions. So we're going to answer some of those questions at the end. But like I said, on June 22nd, we're going to collectively compile all those questions together and hit on some of the high notes. So we hope you join us for every one of our webinars. Please, like I said, like, share, comment. We'll get to as many of them as we can. So Mark, let's kick off these slides. Let's talk about our products. Non-QM, like I said, is going to be the focus for today, but jumbo, conventional, government, we do it all. So Mark, chat about some of our products. Maybe answer this. What are brokers doing differently in 2021? Obviously, 2020 changed a lot for the entire industry, and especially non-QM was affected by that. But talk to us about what brokers are doing differently in 2021.
In 2021, brokers are dealing with issues that, again, were not present prior to the pandemic experience. So You're dealing with self-employed individuals whose tax returns may not be up to speed. You're dealing with a very hot real estate market whereby right now homes don't even last a minute on the market. A lot of pressure to get loans accomplished, a lot of pressure to do loans with a different type of documentation than standard Fannie Mae loans, which require you to pass what they call as a DU underwrite, where here at A&D we do manual underwrite. It's a way now today. They need to get the borrower in, they need to get the borrower qualified, they need to get the borrower closed in a rapid manner, and to, in some cases, limited documentation. So where a standard Fannie Mae loan stops or is not successful, A&D offers non-QM loans that fill that window to get the loan to close.
Gotcha. Let's move to the next slide. So obviously non-QM here at A&D, non-QM, jumbo, conventional, government. But let's talk about non-QM specifically. Who are they for? What are they? Explain. I'm sure most brokers joining us know what non-QM loans are, but let's talk about non-QM specifically. What are they? What are the differences between non-QM and agency qualified loans?
So a broker usually starts off thinking a borrower is an agency loan, a QM loan, which generally goes something called Fannie Mae and Freddie Mac to do an approval through an electronic lending apparatus like LP and DU. Those are your standard agency computerized approvals. Well, when the approvals don't get to where they need to be, or where tax returns don't help you, where you're really doing a great on your tax returns, you're not making it due to great amount of deductions. So non-QM comes in and fills the space whereby you don't qualify with a tax return. We could qualify you with just bank statements. Where your tax returns fail, and perhaps your tax returns and bank statements fail, we have a profit and loss program where no bank statements are required. If those issues are there and you don't qualify on a P&L loan, you don't qualify on a bank statement loan, you don't qualify on tax returns. If the loan is an investment loan, we have something called a Dscr loan, where no income, no employment, no rent on the 1003. We just go basically off of whatever the appraiser says on something called a 1007, part of an appraisal, which is your rent schedule. Yep. We take 100% of the rent. If it's $1 more than the mortgage, you get a good rate, a really, really good rate. If it's less than $1, your rate goes down a little bit. And in some cases, if your loan to value is less than 70% and you have a credit score of 700, we don't even need the property to debt service. So if the rent is far less than the mortgage, we can still do your loan and close it.
Talk to me regionally based. Obviously, I think non-QM loans are specific to certain parts of the country. Tell me where they're more prevalent than others.
So where non-QM is very prevalent would be California, the East Coast of the United States. They're very prevalent. Down to Florida, Texas, the tri-state area in the Northeast, Florida, Texas, out to California, Nevada, Colorado, in the areas whereby there's a large amount of investors, a large amount of movement, population movement, primary residences, second homes. So where you have a big second home movement, you have a lot of non-QM and primary out on the East Coast and again, West Coast. So that general area of the country. Gotcha.
Let's move to this slide here. Let's start talking about some programs, income types, and so on. On this slide, we've got prime jumbo, super prime, prime. Talk to me about the difference between these three: prime jumbo, super prime, Fannie Mae, AUS loan. Talk to me about the differences that you see here on the screen.
So the prime jumbo loan has come out recently, whereby the client that we sell to, the client that our the general companies out there sell to, is now allowing a jumbo loan to be run on DU for underwriting. So where a client is very comfortable running an agency loan, Fannie Mae, Freddie Mac, a standard conventional agency loan, welcome Prime Jumbo. You could run a jumbo loan through DU. Again, that's Fannie Mae. And if Fannie Mae says you're approved ineligible just for the point of the loan amount, I can close a loan to $2 million on a Prime Jumbo using the DU process, which brokers are very comfortable with in underwriting, and close a loan in that space. Now, as in an agency loan, whether it's jumbo or not, if the agency doesn't work or DU is not working, we move to super prime. So super prime is the non-QM answer to an agency loan. What can be done? Well, jumbo loans are available on super prime. Even if you had a credit event over 24 months ago, this is where you would go. So you have jumbo loans in super prime. You have my 12-month bank statement loans, which are, again, answers to tax return issues. You have the profit and losses available there. You even have a 1099 program where for an individual working for 2 or more years, we just take the average, no haircut, so to speak, just the 1099s for 2 years and year to date, and that works wonderfully. We could move to the prime. How does prime differ than super prime? Well, there are still jumbo loans available on prime, but at lower credit scores. So most people think super prime, people think jumbo at 680 and up. We could do jumbos under 680 credit scores on super prime and prime. Prime allows for issues with credit. You could still do jumbos there, but if you had some 30-day lates, you could still close your loan. If you had credit events 12 months and 1 day, you could still close your loan. Now we move to Dscr loans. The world is full now of investors, opportunity to buy a property as an investor. So your Dscr loan allows you to go, depending on your credit score, up to 80% loan to value to purchase an investment loan with little or no documentation other than the appraiser's 1007 rent schedule. And with that, that'll then dictate how your loan closes. No income, no employment, no rent, and jumbo loans there are available too. Foreign nationals. Well, foreign nationals are there. We invite, such as the Statue of Liberty, bring us your everybody. And we are the home of foreign nationals in the United States. So we have loans for foreign nationals who are purchasing investment homes here. So what can we do for them? We have a Dscr loan, no income for a foreign national. We have a full doc loan for foreign nationals whereby a CPA or employment letter is needed for your foreign national. And even countries, which a lot of lenders aren't doing, we will do Argentina, we will do Venezuela, we will do Russia, we will do China. We will do loans for everybody around the world. And one of the golden nuggets of the foreign national program, we do not need reserves here in the US. Reserves could be abroad, the 12 months reserves. The bank statements, the funds to close, the down payment can all be abroad. You don't need to send them money here first and then go to the title company. It could be wired direct. Finally, our Light Doc program. Light Doc is where we've tried all the doors, whether it's agency, whether it's non-QM. We have a Light Doc program where we will manually underwrite, look at the file, and see whether or not an investor loan can qualify.
So these are obviously A&D mortgage terms that we're looking at on the screen right now. Talk to me about the differentiation between in the market and what we offer versus what some other don't mention any names, but maybe what is common out there in the industry and kind of the advantages that we have. And before you answer that, we're also these terms we're always looking to add change to serve as many brokers as we can, and Prime Jumbo is being updated. It says on the screen up to 2 million. That's going to be changed on May 31st to 3 million. So talking about, there's always a change and evolution of the mortgage industry and the terms. Talk to me about what we're seeing here compared to kind of what's out there.
So I call it the golden nuggets of A&D mortgage. So let's talk about Foreign National. There's a large amount of golden nuggets that how we differ. So we differ with Foreign Nationals than the community at large of banks, whereby we allow, again, reserves can be in foreign banks, the 12 months reserves. We permit bank statements and down payment closing costs abroad. We permit the use of business bank statements for the program. We permit gifts on our Foreign National loans, which most lenders do not allow. And finally, we allow the no income, the Dscr loan, which is very different on our Foreign Nationals than most of the community at large allow. We then move to the Dscr loan. Well, with the Dscr loan, we don't require leases with our Dscr loan. Some of the community at large requires it. We have at 70% loan to value or less with a 700 score, we have no debt service. So basically, as long as the property is rentable, we can do something for you. Continuing with the debt service loan, with a good credit score, we could go up to 80% loan to value for your investor who just wants to get in the property. As long as it appraises and the debt service is at 80%, would be $1 more than the mortgage. Moving on to Prime. So where are we in Prime? Prime allows you to get a pretty good rate, pretty decent rate, with a credit event, foreclosure, bankruptcy, short sale at 12 months and 1 day. And we even allow you to have 30-day lates in the past 12 months. Super Prime. Well, interesting. For the rates that we offer, the really good rates on Super Prime, most of our competitors require a 48-month distance between bankruptcies, foreclosures, short sales. We only require a 24-month distance, 24 months and 1 day. So you're able to get loans on Super Prime up to $3 million. And depending upon your credit score, you could pretty much get in with 24 months and 1 day from a credit event. Finally, Prime Jumbo. How do we differ? We don't limit how much one could charge on Prime Jumbo. We call it our non-QM. So if somebody wants to charge 2% mortgage broker fee, a lot of our competitors limit you to charging 1.625. So we allow you to do 2. You want to do 2, 2.5, we're okay. And you're not limited to where your tier, which is how much you write as the maximum you could charge. On non-QM, we allow you to charge up to 3%. So we want you to make a living, and we don't stifle you from capping you. So on this loan, most lenders out there are 1.625. We go beyond that.
Let's talk about how we break down some income types here. Talk to me about some of what you're seeing here and how that benefits borrowers and our brokers.
Well, in looking at the overview of this particular chart, we have several ways of doing income at A&D. We could do 1 year of tax returns. We could do 2 years of tax returns. We can look at the last 6 months of bank statements. And if you have a large sum of money in the bank, we could do something called asset utilization, where as long as the amount you have in the bank is 1.5 times the loan amount, whatever that final number is, we divide it by 100, you can qualify that way. Moving on to other types. We have 12 months bank statements. With the right credit score, could get you to 90% loan to value on a primary. We have also a 24-month bank statement loan, which allows you to save on the rate. Moving on, we have a 1-year P&L, which goes to 75%, and a 2-year P&L that goes to 80% with no bank statements. Competition likes to put bank statements with P&Ls. We don't need them with our profit and losses. Foreign national full documentation, that means a CPA letter from abroad that says they own the company, how long, percentage of ownership, and what you're looking at is their 19, 20, and 21 income. We have to get that translated with a copy of the license, and there's your income. We could also do the Dscr for foreign nationals as well. The 1099 is pretty neat, like I said before. That's the one where we basically get a Fannie Mae verification of employment, as long as it's jotted as 1099 for 19, 20, year to date. There's your income. Just you do the average. Once again, no haircuts. We don't have them in that program. The WVOE is we just do a VOE only. So if you are a salaried person working for 2 or more years, then we could do a VOE only with you as long as you've been at that company 2 or more years. And we've already discussed the Dscr loan at length about what's needed. The full doc prime jumbo is what it is. Tax returns, W-2, pay stubs. If you're going to go for the best rates in the low numbers, you're going to need to do a full doc loan just like any Fannie Mae loan.
So how, Mark, let me ask you this. If we've got brokers on the video right now or watching after, if they're new to non-QM, what's the best way for them to incorporate non-QM into their portfolio?
Well, basically here at A&D, we want to say yes for a loan. So how do they incorporate it? Well, when they're doing a regular standard Fannie Mae loan, full doc, tax returns, the whole gambit of income. So what you're going to want to do is if that's not working and you have a loan to value of 90% or less, you could say, okay, I'm not going to say no to this loan. I'm going to look at the menu that A&D has and say, all right, how can I help my client? So the best rates are more at the bank statement level. 12 months bank statements to 90% would be your first thought if a 90% Fannie Mae full doc is not working and a borrower is self-employed. And again, a lot of non-QM is based on self-employed individuals because they are masters of tax write-offs. So their tax returns generally are at issue, so they save money on taxes, and they're not buying a home every day. So when you have a client like that, which is the majority of self-employed individuals, you would look at a bank statement loan. Now, if bank statement loans are not there, we then, next step, we go to a profit and loss loan. More down payment, but again, less documentation. You can move forward that if a bank statements don't work, profit and losses don't work, but they have a good amount of money in the bank, you default to an asset utilization program. You could do it for that type of a loan. If we're talking about individuals who are more in the middle management type or are more in the standard workforce, let's say physical therapists, nurses, attendants where they are 1099, but they're working for the same company for many years. You could do our 1099 program since they're not being paid with pay stubs, but they're getting a reasonable wage for them to afford a home so that we're able to do a 1099 or a VOE program if you're salaried. So these are the ways that you want to think about how to solve the equation, the puzzle of getting a borrower through if your agency and DU underwriting does not work.
So I've got some common scenarios here that I wanted to touch on. You already covered the first one, so I've skipped that slide. Common scenarios. The first one was self-employed. But talk to me about a local real estate investor and how we can maybe help them with minimal documentation?
So a local real estate investor who's generally speaking to the general realtors of the area, like a Kai's or a Caldwell Banker, they'll walk into the office and they'll say, hey, I want to buy or invest in some single family homes or condominiums. They want to get in. They want the least amount of documentation because they want to get in and they want to close. So the answer to the investor is our DSCR program. 20% down with credit scores over 700. You can get in, providing that you have the rent $1 more than the mortgage. Now, if that is
Hey, Mark, give it just a second. I think your Wi-Fi or your internet is a little slow. Worst case scenario for live webinars.
So here we are again, but it seems to be perfect now. Continuing is your for an investor. That's a standard deal, and I think we would be great in helping any investor going to a realtor.
All right. Like I said, worst case scenario for live webinar. Mark, I think you're back with me now. We lost you for a good few seconds, but I think we got the point. Let me flip to common scenario number 2, not from US, maybe issues with income documentation. Talk to me about our foreign national program and maybe how that differs from others.
So our foreign national program goes to 70% loan to value, whereby a foreign national puts down 30%, and they could show income from a CPA, or if they're employed, income from an employer on a letterhead abroad. We don't care if your money is abroad. We don't care if your reserves are abroad. We don't care if you're using money from a business account, providing you have access the same way in the United States that a CPA there abroad says you have access to the money, you can use it. Reserves must be in a personal bank account at the end of the day. All funds can be abroad and they can be wired directly to the title company. They don't need to stop in a US bank first, which is very common. The reserves do not have to be in the United States, which is very common. And finally, we do require, before closing, we do require them to open up a US bank account for auto debit.
Let's switch to this slide and talk about 2020 was obviously a interesting year. Let's talk about some recent updates. I'm going to flip through these slides so we can try to get through as many as possible. So recent updates. Talk to me about rate drop in our super prime, our changes in our prime jumbo, adding 15, and talk to me about some of the recent updates.
Okay. So the ownership here at A&D Mortgage has been looking around to best securitize our loans, to find the avenues to get better rates, the avenues to get better times as far as 30-year or 15-year. So what we've done is, through that ability of securitization, we've been able to lower our non-QM rates from 1/2 up to 5/8 or better in the past month. We've also, again, through that ability, have brought on the prime jumbo AUS, which allows us to do really low rates for jumbos to $2 million and coming soon to $3 million. So we're working every day. Our secondary market here at A&D Mortgage is working every day to get the rates as low as they can, to get the documentation that we need as less as it can, and as long as it meets the risk. But we're doing our best there, get it as low as we can, and to get the turn times. So you get your loan in, you get your loan disclosed, you get great rates, reduced amount of conditions to get you to closing within start to finish 30 days.
Talk to me, Mark, about some sales strategies. So non-QM loans are pretty unique and can be tricky to navigate. Give our broker some advice on sales strategies and talk to them about the expansion of non-QM.
So expansion of non-QM, very interesting. Years ago, there was a passages of something called Dodd-Frank, and that brought about something called investment business purpose loans. With that change, it can permit you to expand from the state that you're in. You can go to up to 40 states in the United States, expand your business, and do investment business purpose loans. Even if you're not licensed in those states, we can help guide you and show you how to expand your business for investor business purpose loans. So you're sitting there in New York, you're in California, and you want to go into the middle of the country. You think you can maybe get something going on in Colorado. Wow, great idea. Investors moving there, ski in, ski out, things of that nature. Let A&D Mortgage help guide you in situations like that to expand your business base. What else? The understanding that you're not restricted to just a Fannie Mae DU underwrite. You could come to A&D Mortgage and you get a manual underwrite. The rates are a little bit up, a little slightly higher than a standard Fannie Mae, but you're getting your loans done. Fannie Mae has moved away from the 80% investors. We have moved to 80% investors, where Fannie is running away from certain types of loans. We embrace them here at A&D. Again, the 80% investors, the 80% DSCR investors. We want your business where Fannie Mae does not.
I'm going to wrap this up in a few minutes, but let me just say to anyone watching that I had way more information on here, probably over prepared. And for anyone that actually subscribed or signed up for this webinar on the link that we put on social media, we're going to be sending out all of that information probably tomorrow to everyone that actually subscribed. So if you're watching this, if you're on a social media, go back and look at our original post. We've got a link where you can get all of this information. We're going to send out a presentation that has way more information than the slides that you're looking at. So make sure you do that because I've skipped a handful of slides because we had originally scheduled this for 30 minutes and we're already 2 minutes and 57 seconds over. So Mark, I want to skip to this slide. A lot of companies have taglines, and a lot of those taglines really don't mean much. And at a glance, our tagline, our mantra is really the power of yes. What does that mean? We really do focus on, especially focusing on non-QM, really helping borrowers that may get a no from some other company. We really do everything we can within our guidelines to say yes as much as possible. Mark, talk about how we think about that here at A&D Mortgage.
Well, the power of yes. At A&D Mortgage, we manually underwrite versus a DU computer underwrite. So we give a human touch here. When you put a loan in and you initially start a deal where a realtor's got a contract and contract dates and they're pushing you and you need to get a loan done, and you get the Fannie Mae result and it says it's not approvable, we're here to help you make that loan approvable, to say yes to your loan. We're not in it to not do loans. We're in it to do loans and to make them close. So the power of yes is when agency says no, come to A&D Mortgage, where we can say yes to a good number of loans where agencies won't function. That's what the power of yes is. We want to close loans here. We want to consider all of your loans. And again, you look at our matrices that meet the requirements, and don't turn away from a loan that may need some work. The account executives here at A&D Mortgage have been in the industry for many years, and they're here to give you a human touch, review what you have, and get you on the road to a yes, away from a Fannie Mae no. Where again, once again, A&D is here to say yes to your loans.
That's awesome. I've got one more slide, but let me ask or answer a question that came in. one person, William, asked how to be notified for our upcoming webinars. Guys, if you're on this stream, just go to the link in the original post, whether it's on Facebook, LinkedIn. You can register, name, first name, last name, email address, and we'll be sending you the invites for future webinars, the next 4. But Mark, last slide I want to focus on, obviously, other than what we've already talked about with fantastic programs and guidelines, what else do we have at A&D Mortgage? Why would a broker want to partner with us outside of course, our specialty with the programs that we have?
So partnering with us, why? It is my understanding, feeling, and just knowing that the account executives here at A&D Mortgage have a vast knowledge of non-QM. So when you partner with us, you're not only getting our programs, but you're getting somebody who will navigate you through the non-QM process, point you in the best direction to get your loan closed, again, to say yes. We have a broker training team so that in case there are issues along the road, we have a great team that you can call upon and they can help you navigate technology. We have our broker support team, which will help that if you do run into a stumbling block whereby something just isn't fitting, you could talk to your account executive. The account executive could talk to the support group and even obtain exceptions where we just don't, as far as guidelines go, guidelines can be bended a little bit. And as long as we have the understanding and the wherewithal through the manual underwrite, you could even get exceptions here at A&D Mortgage. Concierge support. With bank statement loans, literally you could send in your bank statements, 12 to 24 months. They could be evaluated, and it's just part of service here at A&D Mortgage. Service, 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 getting you to yes and closing your loan.
I just want to point out your pronunciation of concierge, very fancy. Concierge, I like it. Well, Mark, let's wrap this up. You are obviously a pro in non-QM and more. We're lucky to have you at A&D Mortgage, and I appreciate you participating. Like I said, for those of you watching, we'll send out these slides to anyone that registered for this webinar. If you want to still register, go ahead and do it. We'll that way we'll have you in our database, and we can email you all these slides that will have a lot more information. But we appreciate everyone watching, and we'll see you next week. Thanks so much.
Thank you for having me, and